Hey there, everyone. We'll wait another minute here until noon on the dot. Glad to be with you here on Sunday afternoon. We don't have any trading tomorrow. So a long holiday weekend, and I'm getting snowed in. As you can see, it's not a significant amount of snow, but here down south, we don't really have plows. So, enough to know that I was going to be snowed in for the weekend. Figured we can spend some time chatting. This is going to be very informal. I'm just going to be reading the YouTube comments. Haven't really interacted with you all on YouTube in a while, so whatever you want to talk about regarding trading, lifestyle, psychology, we can even look at charts. We can talk about anything, really. Got my old Rasputin Winter Stout ready to go. Gonna watch Tom Brady in an hour. And that's about it. Storm coming to New York. It's not been as significant as they said it would be. Definitely a chunk of snow, but now it's more a wintry mix. And they were saying, a foot plus, but at this point it'll probably be 8 total inches. Let me just practice my screen switching here. Good to go. Start with Hayden's question first. Hayden is a big help in the chat room. So Hayden wants to know how I got into ping pong. Got into ping pong, I had a table as a kid, but never really took it seriously. It was college because I lived in a house with 5 other people and we had a garage with a ping pong table. And a lot of drinking beer and playing ping pong. And that's when, actually it was one of our friends who went on a vacation or something for months and played with someone really good. And so he came back and he was really good. And then we all leveled up to match where he was at. But definitely a big fan of ping pong. We play with a lot of the ChartGuys members here at my house. Now I've got 2 tables in the basement. How much do I bench? I don't know. We'll definitely look at some charts. I do like the VRNOF setup as far as USMJ is concerned, just in comparison. It has relative strength versus peers, but we need that whole sector to show life if we're going to see any kind of significant follow through. But if that sector does show life, which again, I know I will make money on the USMJ sector this year. How do I know that? Because later in the fall and into November, we have the voting season. States will legalize medical programs, and that will be enough media attention for some attention on the stocks. So I don't know when that opportunity is going to present itself, but again, there is a historical trend in voting years that late fall, or I should say late summer through the fall, that there is opportunity. So when that sector gets opportunity, VRNOF will definitely be a top watch. It's building a base of support nicely. I guess let's look at that chart. Just talk about USMJ real quick here. So again, USMJ, a few of its names are building a base of support, and they're coming off the lows. And VRNOF is one of those names where we have the $10 base of support, and you can see we're 25, 27% off of that level. And you got TCNNF, which has been building a base in the 23s. So there's definitely bottom fishing plays for longer term swing positions, and just would want to stop out if we drop to lower lows. But again, there's a lot of time between now and the fundamental catalyst that is in 10 months from now, or 10 months from now. So I'm very patient, but I know that that opportunity will be there, and definitely going to be looking for some exposure if we do see bullish upside in the sector. So keeping an eye on it constantly, but also in no rush. Here's the ETF, MSOS, trying to shape up a daily trend change here. And essentially, for these bulls to prove anything to us, we would need a break of 25, 23, and 26.51. We want to get to levels where we say, this is the highest price that we have seen in the last X number of months, meaning anybody that has gone short in the last X number of months, ideally, anybody that's gone short in the last 2 months is now underwater. That's when you start seeing shifts in momentum and the scales tilting between supply and demand as the demand starts to outweigh supply more significantly. So definitely going to be watching this sector closely all year and being very patient, waiting for it. How significant are the moving averages? Good morning, Wendy. Is there a big difference between exponential and simple? There is, but the 8-period exponential moving average would be very similar to, say, the 5-period moving average. So obviously the time frame makes them similar or different. And I find exponential, I really simplified things. I used to use the middle Bollinger Band, which is the 20-period moving average, the 50, the 100, the 200. Those were my big four. And I used them for years and years and years. I probably used those for 7 years of trading. And I like them. They worked well. I like the middle Bollinger Band a lot. But I shifted. When the crypto bull market took place in 2017, I shifted and took all those moving averages off and just used price action and exponential moving average 12 and 26. And that worked really well in the crypto space. I brought those moving averages and the simplicity of the charts over to the stock world, and that momentum kept going. And so I just said, all right, I'm simplifying things down. This is all I'm using at this point. And it has worked really well, and I like how it's gone. And that's the way, again, as traders, it's constantly evolving. If you're trading the same way in 3 years from now as you're trading now, maybe a little bit longer, 4 or 5 years, I would say that's a bad thing. You have to be evolving with the evolving market conditions because things are constantly changing. And, I use Twitter now exponentially more than I used Twitter 5 years ago because it is now a more ingrained social media platform with how it impacts stocks and markets. I mean, you got CEOs like Musk on Twitter. That wasn't a thing back when I started trading. And of course, Trump on Twitter was a whole nother level as well. So we have to change and we have to be adapting. And that is one way that I've adapted in the last 3 or 4 years. And if I find something better or something else that suits me differently, then I'll shift again. But for now, that's what I have hammered in on as far as what I like in my charts these days. For crypto taxes, I use cointracking.info to compile my reports and to get my numbers, but posted a link there. That is the actual CPA that I use, who is actually a ChartGuys member, current ChartGuys member, started as a ChartGuys member, then became my personal accountant, then became the ChartGuys accountant. And so we've been developing this relationship with Rohit and definitely recommend him. I'll do a video with Rohit here eventually where we talk about taxes and introduce you all to him. But essentially my first experience was I was expecting to pay a significant amount of money to the federal government, the IRS, the first year that I went to Rohit. And he said, hey, trader tax status is a thing. My previous accountant didn't know anything about that. I can't suggest having an accountant that is a trader if you are a trader. And I got back from the IRS the amount of money that I was expecting to send, which was a huge swing as far as my net worth. So that was a very positive first experience. Trader tax status, which means wash trading doesn't exist essentially, which is nice to alleviate having to think about that at all. So what is my trading strategy when trades head into resistance? Do I take profit and wait for the next setup? Or do I take some off the table, let the rest ride? It depends on the longer term time frame. If the trade is just based on a move heading to that resistance level, I'll take the whole trade off. And again, as my style is more conservative, if I'm going to make a mistake, it's going to be leaving money on the table. So I don't care if a move goes on without me, but I more so in the last couple of years have been really benefiting from partial scale-ins. Scale in multiple positions, scale out multiple positions. And if I sell half and set a stop at break even, it's a lot easier for me to let a trade play out on a longer term time frame and give it the breathing room to make the periods of consolidation that it has to if it's going to see continuation. So I will, most of the time, I'm selling a partial position, I'm placing my stop loss, and then I'm letting the trade ride out. Let's say I'm playing an oversold bounce on the 5 and 15 minute time frame, but I know an hourly lower high is the most likely scenario. I'll just keep walking a stop up as long as we're in a 5-minute uptrend because I know losing the 5-minute uptrend is the first indication that our hourly lower high is being set. As I progressed as a trader, what changed in terms of types of mistakes that I made and how were the losses different in comparison to the ones from earlier stages in my career? So they're the same. They're definitely overlapping. It's just, you make the mistakes where you skip a stop loss or you move your stop loss. And the difference is the frequency. Back in an early trader, I would do that time and time again, and I'd keep doing that. Then I reached a point saying, oh, I probably should put a stop loss on every single trade. And then I'll get into a groove where I'll get a sense of complacency. And I'll make that mistake again. I'll pull a stop loss, or I'll be more lenient with that stop loss. And that'll just be my reminder. But this time around, hopefully it happens, once or twice a year as opposed to once or twice a month. That's the biggest change as far as the mistakes that are being made. Otherwise, mistakes it really all relates to a stop loss. Buying and holding based on fundamentals and watching the price drop 40% more than I ever thought would be possible. That's certainly something that I will never do again, that I did plenty of times in my early trading career. AVAX EQ pattern, definitely a good one. Let's check out some crypto patterns real quick. There's some longer term ones that we're going to be looking at, or that I am looking at as far as key for me. And Mana was one of them. We were all over this one with this 12-hour higher low. And just go watch the crypto video from last week, the last one that I did, because this trade was, when I filmed the video, we were up here. I said, I am making an entry, next 12-hour consolidation. I'll use the previous low as my stop, and we're looking for a bull break of this falling wedge. And so far, things are looking good with that. I'd love a break of 345 for very significant follow through. But this was a long-term pattern that I'm keeping an eye on. There was another one. Is it AVAX or AXS? One of those is very similar. I like AVAX, weekly equilibrium. So weekly higher low trying to form here. And then we'll look for a weekly lower high. But I know that I will be watching this pattern perhaps a month from now. And if it gets nice and tight, we'll be watching very closely for when this pattern breaks. Another long-term pattern that we're watching is the Sol USDT monthly higher low. So Sol USDT, nice and healthy. AXS USDT monthly, also scouting that monthly higher low. So I like those long-term charts, looking for the monthly supports to be established. Another one is, was it AVX? AXS, USDT. And this was a similar falling wedge that Mana had. See if we can draw that real quick. We're right at that resistance. So this is one to be keeping an eye on. If we were to pull back from here, this would keep this definitely a valid channel that I'd be keeping a long-term eye on. Other long-term charts, Litecoin, monthly equilibrium. So why do I care about Litecoin? Because we're trying for a monthly higher low here compared to 103.88, and Link just did this. They were both lead bears. Link set the monthly higher low and is forming this equilibrium nicely, and we're looking for Litecoin to do the same. And again, if this monthly equilibrium is going to be a year in the making, and when it breaks, we're going to anticipate a big-time spike in volume and volatility and significant follow-through in the direction that it does break. The tighter that it gets, the better. But those are some of the longer-term patterns that I'm looking at. One more, and I did grab a position in sushi for this pattern, is a sushi weekly falling wedge. And the play that I am making is for a sushi weekly higher low. So a nice pattern here. And this is the same trade that I just took on Mana, but a different time frame. So this is the weekly here for sushi on the left. And on the right, we're going to look at the Mana 12-hour. And we'll just draw that pattern again real quick. So what is the similarities here? Well, my entry on Mana was a higher low here, anticipating that if this pattern is going to break bull, we need that higher low. I do not want to see the price fall all the way back down towards that support. So if we're going to get a bull break here, we need that higher low. I do not want to see that price fall all the way back towards that support. So my play is based off of the weekly higher low is already being set. If 620 breaks, that's definitely a big time red flag. 620 needs to be the weekly higher low if we're going to be shaping up a break of this pattern. But it's one that I'm keeping an eye on. And again, there's a handful of those longer term crypto charts that I am watching very closely. It's very important, whether it's stocks or crypto, to find these different time frame setups. So you're not always constantly, what am I going to trade? What am I looking for? I know that in the next few months, I will be watching these charts very closely. And I've already done the work. I put a lot of the work in now to find them and identify them and keep an eye on them. And that means a lot less work later in the future. So I want charts that I care about this week. I want charts that I care about next month. I want charts that I care about in 3 months. And I'm just aligning the different time frames and the different tightening patterns for them. And if you remember years ago, we were watching gold on its multiple year. Look at the 2-month time frame here on gold, where we just tightened up. We knew volatility was coming. We just got as tight as can be. This pattern formed over 3 years. And look at the break follow through when it happened. That's the most I've ever profited on gold, was on that move, because I was ready for the volatility incoming because of the tight longer term pattern. So long story short, find longer term patterns that are in tightening ranges and watch for those breaks. TCG hoodie received. Awesome. Glad to see that. Do the CBD only gummies actually have any noticeable effect? No, not for me. So here's a story. So yesterday, my buddy, we were getting ready for the snowstorm. I see my buddy, or my neighbor buddy, is outside. And so he comes over and says, oh, I got these CBD gummies. And they're from a package and from a store. Great, I take CBD all the time. So I just pop one and say, all right, we'll test it out. And from there, I start doing my videos and my regular routine. And midway through an altcoin video, I realized something is very wrong. Something is off here. And then I look down and see, oh, it's Delta 8. I've never done Delta 8 before. And it's just an isolated cannabinoid, I guess, but it had a very significant impact on me. And I got very buzzed mid-video. And I had to stop doing videos and go take a nap for a couple hours. So that is my new experience with Delta. But the fact that that is legal, I mean, that you might as well be eating weed. And I did not know that I was doing that at the time. And it definitely put a big wrench in my plans for the day. But that was the CBD experience from yesterday. CBD is very different from Delta 8 is the takeaway. On Fidelity Active Trader Pro, setting the stops can be aggravating because you have to cancel the whole order to sell partial. So I just replaced the order. And it definitely is a little bit timely. You know, it takes a little bit to fill out that order. So I'll replace the order, sell a half position, and then reestablish a new stop level. I'm keeping an eye on my internet here. I may reboot real quick. We'll see if you all are having issues. What's up, Rex? Glad to see you. Have I ever been whitewater rafting? Yes. Lots of fun, but more so when I was a kid. So I guess while we're on the topic of CBD and Delta 8, question of whether I microdose psilocybin, yes, it has very significant impact in the creation of the chart guys and in my trading and emotional control, without a doubt. Big fan. Micro meaning not feeling it, or feeling it a little bit. But there's going to be massive, that's why I'm watching the psychedelic sector, which is all, getting crushed, all-time lows. But there are going to be major advancements in the next decade with how psilocybin and MDMA and ketamine and how all of these drugs are used in treating depression and alcoholism, and it's going to make its way into the pharmaceutical industry and the biotech industry. And when the floodgates open from the legal hurdles that are in the way right now, it just means significant opportunity in markets. We've seen that with cannabis over the last decade. And granted, it hasn't worked out in the long term, but as far as hype opportunities, that is something that I am anticipating. And it's through personal experience and it's through experience of friends. And I have no doubt that over the next decade, there will be leaps and bounds in terms of progress in this sector, and it will be at the forefront of advancements made in medical science and our understanding of the workings of the human brain, a whole lot. We're just scratching the surface of that industry. What is my go-to stock to trade for 2022? NIO was my most profitable ticker last year, and I don't know in advance. That's the thing. So I generally will just look back and say, oh, this is the ticker that has been working the best for me. So I don't pre-plan who I'm going to trade the most. It has to be the opportunity, the volatility and the opportunity has to be there. 2 years ago, it was Tesla. Last year, it was NIO. Just a coincidence. They were both in the EV space, in my opinion. But that is, this year, I have no idea, is long story short. I just trade, and then I can look back, and after the first quarter, I can say, okay, where has my opportunity been? And I can say, I've been doing really well on these names, and then I can look at their charts and say, well, is this volatility going to continue? And it might be the biotech sector. Again, I've been stressing significantly over the last 6 months, the biotech sector and their leveraged ETFs, LABU and LABD, the amount of opportunity. Let's go back to the charts real quick. You look at it and you say, so what? Doesn't look anything special. But if you look at these leveraged ETFs and the amount of volatility that they have on a daily basis, if you're a day trader, this move right here is 35% over a week. This drop down here is 48%. There is massive opportunity on a daily basis in both directions. This one day, bear ETF goes 16, 17%. So it might be the biotech sector and these leveraged ETFs. What I care the most about is, will volatility continue? Is the setup, because I knew that as soon as NIO started giving me a tightening range, that my opportunity would decrease. This is when I was seeing the most gains in terms of volatility and playing oversold bounces and all that. But then once we started tightening up on the weekly time frame, I knew that, like this period right here, there's not nearly the same opportunity as this period. So here's where I'm pumping the gas and trading actively and aggressively, sometimes maybe 10 times a day. And here is when I'm pumping the brakes considerably, because it's a constricting range. We pump the brakes for constricting ranges because there's less volume, less volatility, less opportunity, and we pump the gas when tightening ranges breaks, because that's when we have increased volume, increased volatility, and increased opportunity. Whether that's on the 2-minute time frame looking for a day trade, or whether that's on the monthly time frame looking for a swing trade, it's the same concept. Recognize constricting ranges versus ranges that have been constricting and are about to open up. And that's how you know when to be pumping gas or the brakes, at least to a certain degree. Will I stop trading crypto if it hits a bear market? I'll never stop trading crypto because oversold bounces are one of my edges. So, you look back at crypto 2018, I was making money in crypto 2018 bullish. And that's just because I really like oversold bounces. So I was playing these bounces. I was just trading much less. 2017, I was only trading crypto. 2018, back to the stock market world and just trading crypto way less. Again, it has to do with pumping the brakes or pumping the gas. Look at the constricting range. Look at this range here. What's your opportunity there versus your opportunity there? It's a fraction of the opportunity in both directions. So that means you need to be trading way less here than you were trading back here. And so one thing I'm watching on the current setup for Bitcoin, I'm looking for the monthly bounces right now. I'm looking for monthly higher lows. But if we get those, I'm going to be very cautious if we start seeing a monthly tightening range. That will tell me to slow down my trading activity, unless, of course, we still see the altcoins doing their own thing, which is a great sign for a maturing market, because that means there's always opportunity, and that's going to keep money in the crypto space. Otherwise, you get your opportunity, you recognize constricting ranges, you pump the gas, you pull money out of your accounts, you take them to your stock accounts. But if the opportunity remains in other names, even if it's not there in Bitcoin, then that means you leave your money in your crypto accounts, and that keeps, the market cap of the crypto space as a whole a lot higher. So I will be watching for an eventual constricting monthly range in Bitcoin, but we need that monthly higher low first, anything above 29,000. But I am scouting these monthly higher lows here. And I'm scouting that monthly higher low sooner rather than later. That's pretty much the setup that I'm watching right now. ENS has my eye. 12-hour equilibrium was a good one. Just breaking bull. Need to get over 28.92 for follow through. What percent is my goal for growing my trading account in 2022? So I have fairly low goals because, again, I went real aggressive 2017, 2018 and leveled up significantly. And again, the analogy that I give is that was me accelerating on the on-ramp to get onto the highway by being real aggressive. I was all in my crypto account, trading Bitcoin, almost every trade that I was taking in 2017 and trading Ethereum and Litecoin. And now I am on the highway and I'm just setting cruise control. And so after going, a few thousand% in 2017, a few thousand% in 2018, now I'm looking to go, I'm looking to go 10, 20%. If I just keep doing that, I stay on the highway and cruise control and I am good to go. I'll get to my destination. So 10%, 10 to 20%. Why don't I just put my money in the stock market? I don't trust our financial institutions. I don't trust our government. I don't trust anything about leaving money in the stock market. And I know, yes, looking back historically, it would always work out, but I just don't have that confidence. So I would much rather have the again, it's paying for psychological well-being. I don't care what the market does overnight at any given time, unless I'm in a notable swing position, which is far more rare than common. So for me, I will pay. I will pay with my time to be actively trading versus just buying and leaving it, because if I had bought and left it during the 2018 dump, the COVID dump, any of those, I would have significant stress. I don't like that stress. I don't care. I don't like caring what markets do. I love being protected against the market overnight. So I'm looking for, and I'm talking all trading accounts. I'm talking crypto plus IRA plus stocks plus my multiple stocks account, all trading capital. I want to go 10%. And I usually exceed that goal, fortunately, but that's where I'm at. Crypto trader of 4 years, interested in stocks. Would I recommend in terms of having capital if you're going to join the chart? I mean, that's, people in the ChartGuys they're trading with $5,000 or they're trading with $5 million. So we have the entire end of the spectrum. And essentially what you want to be doing is just focusing on your education. So having a significant amount of starting capital is not essential. You obviously don't want to, the key in your first few years of trading, and I know you've been trading crypto for a few years, but first year trading stocks, you want to be using smaller amounts, you want to be learning, and you want to be preserving capital. If you can preserve capital and have the same amount or more of capital after 1 year of experience, as opposed to when you're just starting, you just gained a ton of experience that you can now utilize. The number one reason people will fail trading is they do not preserve their capital. They blow it before they are ready and before they have that education in. And again, I hate the stat. 90% of traders fail. Number one, where does that stat come from? Where's the data? People will link, a study from some South American market from 15 years ago. The data isn't there as far as being able to say, well, it's 90%. Number two, who qualifies as a trader? Think of how many people picked up the mouse during COVID and clicked some buttons. Now they're a trader because they placed a trade. What is the criteria that makes them a trader? Of course, if you just pick up your mouse and click some buttons, you're probably going to fail. I want to know what percent of traders who have put in 1,000 hours of education and are 2 years into their journey, what percent of them fail? That's the data that I want that doesn't exist. So you have to put in the education. That's like, the analogy that I give is, that's like going and saying, well, 90% of high schoolers that want to be doctors fail. Yeah, okay, but what percent of students that want to be doctors that are entering a doctorate degree fail? It's a huge difference. You can't compare the two. Yes, I have multiple siblings. Nobody in my family is into trading. How much did I grow my account in 2021? Across all of them, 40%, roughly, right around 40%. Which again, very pleased with. Multiple times more than my goal going into the year. How many years or months did I spend learning TA before I became a full-time trader? So that's a tricky question because I was a full-time trader before I was ready, in the sense that I was fresh out of college. I, could live in a car. I could live in a shed. My cost of living was $400 a month for a while, which means, I can be a full-time trader and cover $400 a month fairly easily. If you got a mortgage, if you got a family, it's a completely different story. But confidence, year 5, I would say, well, year 4. Year 4, I was able to say, I can remember saying to my dad, I'm going to be a millionaire. And he laughed, of course, not doubting me, but it was just a funny statement. But I was certain. I at that point in time, I had made my first $100,000 in markets, and I knew I'm going to be a millionaire and I'm going to do this for my life. And it was just, that was the moment where it all clicked, and just knew that this was the path. And it was just a certain level of understanding. And really it had to do with, I made that first chunk of money in the MJ sector before there was any legitimate MJ companies. And I knew this sector is only going to get more legitimate. There's only going to be more opportunity. And that was a big part in me knowing, man, this sector alone, I can just milk this for the next however many years. And fast forward 4 years from then, and there was the significant opportunity in the Canadian markets. Do I use any of my crypto for lending or staking? I don't. It's probably a missed opportunity, but again, as I said in a recent video, my focus is a limited asset, and I can't do everything that I want to do, so I have to limit my focus. And in one area, I don't have the time to in-depth understand the lending and staking and have confidence in that. Someday I will, but not at the moment, for sure. What would I say to someone looking to start with 10K? I started with $3,000. I started with $3,000 saved up from high school jobs. And I definitely lucked out in many ways. I'm not saying it's easy. I'm not saying someone with $3,000 can make it. I can look back and say, I'm lucky I stumbled into an MJ bull penny stock market that was extremely forgiving for me. But don't let a certain amount limit you as far as saying, well, I only have $10,000. I shouldn't even bother. But again, you got to preserve that capital. Don't be risking that $10,000 until you have a year plus of education. Risk $10, it's fee-free trading now. Risk $20 a trade and practice with that small an amount. Have I considered creating a dividend portfolio? Yes, next fear dump, I will. This is the first time, the COVID dump is the first time I grabbed a long-term no-touch stock position, which I just grabbed SPY, and that worked out wonderfully. But next time we see significant fear, significant dumps, I will look on establishing some dividend names in my IRA. What's the latest with the trading house? COVID. So trading house is still a thing. Jungle Funk is holding it down. Went there a couple times this past week to live stream when my internet was being a little iffy. And some friends roll through and hang out there. But as far as the initial vision of what I had for it, with COVID, that obviously took a big time backseat. Favorite outdoor activity is just being outdoor by myself and not talking. Just shut up. Just shut up and observe. There are a lot of times where I'll go outside with a group of people and I enjoy it and it's fun and I definitely enjoy that some of the times, but there's a bunch of times where I'm out there with people and I think, man, I wish I was alone right now. If I had to choose one of these sectors to buy and hold for 2022, which would it be, MJ, uranium, or crypto? Honestly, I don't love those questions because it's just a guessing game. And I would never base any trade off that random guess. So what's the point? Yeah, there's no point in even guessing. I get new information every single day. Tomorrow, I will have more information than today as to what the answer to that question will be. And there is no reason to box ourselves in and limit us from being able to take advantage of that new information. So yeah, I don't trade that way. That's not the way my brain works. Have I ever thought of creating a Twitch channel? Not really. Hey, John from Bermuda. This is definitely like poker as a profession. I've got that video. If you YouTube ChartGuys poker, you'll find it. But I was a poker player long before I was a trader back in high school, back when that initial rush of the World Series of Poker and ESPN and all that was going on, Doyle Brunson, and definitely parallels. Without a doubt, having poker experience accelerated my ability to get trading. I already had the risk-reward aspect down. I already had some of the math down. And there are tons of similarities. We can definitely chart things today. We've already looked at a couple. We have a big week coming up for the broader market. So there's one of two things are going to happen this coming week. Well, we only have 4 trading days, so it's not essentially, it doesn't have to be this coming week, but we are either going to head back up and be talking all-time highs in SPY, or we're going to confirm a daily downtrend, lose the weekly higher lows, and at that point, the NASDAQ will be seeing bear follow-through from the first confirmed weekly downtrend since the COVID lows. So it's a very important week for me. And we're also heading into earnings. We got the rest of the financial sector earnings this week and Netflix coming up, and then the tech sector in 2 weeks. And that's pretty much going to dictate whether we see more significant pullback or whether we're talking all-time highs again. And we are very close to either of those scenarios playing out. Definitely want to practice trading in both directions to be able to take advantage. Obviously, historically, there's a lot more opportunity long than there is short, but you want to be able to be comfortable. See, that's the thing. For me, I don't care what happens in the market. I know that if we drop down and enter a bear market, I'll make money in the bear market. And if we keep going all-time highs, I'll make money in the bull market. So having that confidence of being able to play both directions is essential. And if you have trouble looking bearish, just look at the inverse ETFs. So SQQQ would be one version. You can also invert charts on TradingView to help you look in the other perspective, but definitely something you want to practice to be comfortable in both directions. You don't want to be reliant on one kind of market environment. You know, if you trade really well in a hype euphoria breakout market, and then there's no hype euphoria breakout market for a year, it's going to take you a while to find that new stride and that new flow in a new market environment. And again, that's the kind of thing where experience is so important because you can't teach that. You can't teach someone what it's like to trade in a bear market, what it's like to trade in a euphoria market. You have to experience it and make those adjustments and be able to recognize those things. Poker boom of 2003. That's exactly it. How to build discipline and patience in your life. So that's a good one. That's essential, right? We know if you can't have that, then you're not going to be a trader. Very simple. So routine. You have to prove it to yourself in small ways. Set a goal. I will work out 20 minutes every single day. Whether it's push-ups, whether it's jogging in place, whether it's going up and down your stairs in your house. I do that in my house. Whatever it is, if you can't prove that to yourself, if you can't prove that you can stick to 20 minutes a day, tiny little window a day, then there are big red flags. You have to prove it one step at a time. You prove it with your health. You prove it with your sleep routine, taking care of yourself, with your healthy eating, with your workout schedule, and you prove that in your life, and then you apply that. Again, trading is a lifestyle. It is not, you can't just have a trading be a little aspect of your life. It encompasses your entire life and all of everything that you do in your life, and all of your personality traits and all of your habits have to complement trading. So it starts far away from trading, and your personality traits have to then bleed into trading in a good way. You can't find me a consistent long-term trader that flips out and yells in traffic. You can't have that lack of control. So there's a ton of psychology books. The Taoism of Pooh, Be Here Now, The Power of Now, getting into lucid dreaming. All these things significantly impacted. I was interested in psychology in high school. And whether it's Jung or Freud or whoever, there's so many other avenues that you can study or read up on that benefit trading. Thanks, El Guapo. Waterfalls and Pisca are definitely some good ones. Why do I do ChartGuys? There's a good question. Why do I do ChartGuys? Because I don't find importance or significance clicking buttons on my own. If I'm sitting here by myself and not interacting with people and clicking buttons, even if I'm making money, sure, great, but I would get bored so fast. What the hell is the point of this? Great, made some money, all right, now what? It's just insignificant. No contribution to society, it's, for me, it's not worth it whatsoever. I would still trade, but I would do it, a couple days a week. It's the interacting, it's this right now. I mean, why on a Sunday afternoon am I live streaming and chatting with strangers on YouTube? Because I enjoy the human aspect of the things, of the game. The ChartGuys, the community that has blossomed out of the ChartGuys with 1,000+ people and the different meetups we've done in Canada and Mexico and across the US, and interacting with people and the friends that I've made. That is everything in terms of the benefits of being a trader. That's where the fun is. So I have fun live streaming. I have fun answering questions. I have fun trading. But if I was not interacting with people, I would lose interest very quickly. And also, side income. Let's not, how many gurus never mention that? I'm making income from doing the ChartGuys, and it significantly benefits my trading. Why? Because I don't have as much stress. As soon as I got ChartGuys income, my trading rocketed to a next level, and I was able to go aggressive. I would not have gone aggressive in the crypto space in 2017 if I didn't have ChartGuys income paying my living expenses. That's, 2015 when ChartGuys income started is when I stopped taking money out of my account to pay living expenses, and I was able to start compounding gains. And the psychological burden that was alleviated by having a second stream of income was massive in my success as a trader. And anybody that doesn't mention that, there's a reason they're not mentioning that. I don't know what it is, but without a doubt. And that's why I say, being an entrepreneur, having a side hustle is essential in terms of having that psychological ease of not being, every day, how am I going to pay? Well, if I don't make X amount, then I've got to pay my power bill by taking money out of here. And it's just a whole different game when there's that stress on things. That's the other reason, why don't I trade with other people's money? Why don't I have a fund? Because I'm playing a game. This is a game that's for fun for me. And I'm playing with points. And as soon as you give me someone else's money, it is stressful and it's work. It's a very different thing. Awesome, Christopher. Glad the early videos helped you do well in 2020. That's a story with so many traders where they see an opportune market, and because they're new to trading and technical analysis, they give back all their gains. But the second time around, when they get that chance again, they're ready for it. So many chart guys that have been with us for 4 years, had that happen in the last crypto cycle into this crypto cycle, doing so much better this time around because of the experience that you can't teach. You got to live through it. Have I ever traded under the influence? Yes, but I would not recommend it. Definitely not if you want to take it serious long term. It was before I was taking it serious. I was in Costa Rica. I was drinking rum out of a coconut, clicking buttons in MJ penny stocks. And at that point in time, that was right before I got real serious with things. Thanks, Brian. Appreciate you as well. What's up, Paul? I do remember you. I just saw Lena a week ago. Thanks, Eric. When I say a day maker, how much money is that? How much is the percent is that? So again, it's all relative. My day maker right now is 10 times what it was before I had the 2017 crypto level up. So, but the percentage is also way less because I have more capital. So the percentage is, at this point, it's probably 0.1% of my stock trading accounts, all of them added up, is a day maker. And it used to be probably like 0.8%, but 10% is much money. So it's all relevant to the individual. A lot of people, it's what they would make, if they still have a job, it's what they would make at their job. That's their day maker for trading. It all depends on goals of the individual. What kind of student was I in school? I was really good. Good memory. I mean, how much of Western education is just memorizing? If you have a good memory, you can do well in school. I definitely have a brain that is designed for math, not calculus, but in terms of quick math, quick addition, subtraction, my brain does real well with that. In second grade, there was a game where you have 10 total beans or however many total, and you show in one hand and you got to know how many are in the other hand. And I got the crown in class because I was the best at that game. So that helps me with, math on the fly. Okay, what's my break-even position? I can do that fairly quickly in my head. But without a doubt, memory, discipline. My mom I had such a long leash in high school. My mom, I could stay home whenever I wanted. I mean, not to excess, but my mom would say, you need a mental day? You want to stay home? I didn't have to fake being sick. But I knew, I got this project I got to work on. And if I stay home, then I'm going to have more work tomorrow. Nah. And, I could keep my beer in the fridge as a senior in high school. They knew I was going to drink anyway. So why play the game of pretending it's not a thing? But it was just trust. And I never broke their trust. Okay, if you're going to a party, sleep over there. Don't drive, don't get in the car. And all of that prepared me significantly. I got to college and all my friends are partying and having a 0.7 GPA their first semester and almost getting kicked out. And I had already been through all that. So I was a step ahead in terms of maturity, and all of that definitely helped with trading as well. Planning any road trips in the future? I have considered buying a van that I could live in, but nothing concrete. Do I have a crypto hold account that I never touch? Yes, talk about it all the time. It's from 2017. It's mostly Bitcoin and Ethereum, but a small amount of Litecoin and Link. How many trades can I manage at one time? Really, anything more than 3, I start getting real uncomfortable. 2 is ideal. One is ideal. 2 is all right. Right now, I've got 3 open crypto trades, and that's fine because they're fairly similar setups. But I'm definitely a focused trader. I know traders that have 8, 15 positions at once. I can't do that. I'm laser focused on 1 or 2 setups at a time. Still haven't decided what the next route for the trader house is at this point, how we will open it up, who will open it up to. Honestly, it creates a lot of work for myself, just in the sense that, a couple of new traders come into town, I've got to interact with them, and that throws my schedule off, and got to hang out. Eventually, we'll do some kind of in-person education thing. I just have no idea. I'm very hesitant creating more work because I still work 7 days a week, 6 years later, and that's going to change at some point. What's the best way to learn to trade bearish for someone who only trades long in bull markets? Practice small positions and practice, and inverse ETFs. So I would find something. I mean, there are definitely plenty of things in the stock market right now that are in downtrends. You look at the ARCs and the growth names. You look at the biotech sector is in a clear downtrend. So there are definitely things to practice on. I am wearing pants. It's usually the summer when I'm not wearing pants. All of you have watched a video where I'm not wearing pants. What are my long-term goals for the next 5-10 years? Any plans for all the liquid capital that I have saved for retirement? So I definitely move that capital around, whether it's in real estate, whether it's in long-term no-touch positions during fear. I struggle with long-term thinking. I've been living my life 3 months at a time for a very long time. So I don't really look 3 years out. And that is difficult for me to do. So I don't have any long-term plans. I know that I want to travel more, for sure. Plan for the next financial crisis will just be cash and buy some dividend stocks and some long-term no-touch positions. Slowly scaling in. So I've mentioned in the past being very aggressive during hype cycles. Do I have any tips for how to trade those hype cycles to create serious wealth? So number one, the backdrop is important. So the backdrop for 2017 crypto, I was ready. I was 7 years into trading. I was not learning trading during that hype market. I was putting to use all my 7 years of trading leading up to crypto 2017 was all 7 years of preparation for that one moment. And it was blue sky breakout. That is a criteria every time because that's when the moves get insane. And just being really aggressive and being all in. And playing those oversold backburner bounces. I didn't know what a backburner bounce was at that time. I had not created that terminology. But it was just buying first 5-minute oversold conditions on every little pullback and just doing so very aggressively. And that's what it is. Just recognizing the hype, the right catalyst, which is all-time highs, media attention, some kind of fundamental catalyst, and then just smashing it with extremely aggressive trading. And you get to a point where hopefully you've made enough. And I talked about this in the interview that I did with Devin, who's been killing it this year in the crypto space. That's on our YouTube channel. But you get to a point where you say, okay, well, worst case scenario, I had a goal in 2017 crypto of 100%. I want to make 100% and have enough for a down payment on a house. That was my goal. And next thing you know, within 2 months, I'm up maybe 500 to 1,000%. So at that point in time, my mindset is, okay, worst case scenario, I will have exceeded my initial goal. Worst case scenario, I'll have twice as much as I wanted to make. And then I'll be done. If I drop back down to there, done with this market for now. And obviously it just never happened. And I just stayed aggressive because I knew worst case scenario, if I take a huge loss and make a big mistake, I'm still going to be better than what I would have hoped for when I initially got in for that environment, that trade. Hey, Klaus, very active on YouTube. Check it out. Trader House isn't happening anytime soon. There's a bunch of questions, people wanting in on the Trader House. We just saw a town for sale in Colorado for $4.7 million. An old western town with a bunch of structures and a really nice big house. That would be really fun. Trading town. Can you imagine that business idea? You've got a whole documentary series. You've got YouTube content up the wazoo. You've got in-person courses and seminars. You've got co-habitual living and learning and growing. I mean, that would be so much fun. The Trader House was initially going to be a small version of that. But again, I can't predict anything about COVID or where we're headed in terms of group in-person activities with trading. But if someone wants to buy a town, I'll hold it down. What does ChartGuys offer that nobody else does? Our community. I mean, and our responsiveness. 24/7, 365. I won't be doing that forever, but the amount of time that I put into that chat room and everybody else, it's not just me, tons of people, including members, it's absurd. Other groups do not have that kind of access. And we created the Chart Guys coming from another group. And I was in that group and I got in trouble for answering questions because the founder of that group would funnel questions. I can answer this question in 2 minutes. Why are you pointing them to a $300 course? So I got in trouble for answering questions. And I said, all right, just threw my pen. I said, this is dumb. I'm doing my own thing. And I'm going to answer people's questions when they ask them. I'm not going to funnel them to a course when I can literally type 3 sentences and answer that question. Just reading up here. Why don't I trade options? I used to. I went through a period of time. When I first started the Chart Guys, I had a bad trading year because I went from my routine into, okay, now I have massive distractions. I'm answering questions. I'm live streaming. I have to trade while live streaming. That's completely new. So I started losing. And so I significantly sized down my positions and I started day trading weekly options just to see what I could do. And I posted, that was a period of time where I just posted publicly for the Chart Guys, every position that I was taking, buys and sells. I did that for maybe 3 or 4 months and did pretty well. I would take about $2,000 to $3,000 positions, day trading, weekly options, and I would average roughly, 100%, 80 to 100% a month for that 3 or 4 months. And that was just me practicing with smaller capital, being able to run a chat room and live stream while trading. It took me a year to be able to do it confidently. So during that time, I traded options, but I'm just a much better trader. I look at my results. I'm a better trader with common shares where time doesn't matter. I set my stop and that's it. If the stop hits, I stop out. But I really did not like being right. But if I got the timing wrong, I would lose money with options. There's just that whole aspect of time, which makes it so much more difficult, which is why it is such a more high risk, high reward endeavor. But it's just results. I'm just a better trader with common shares. Favorite podcast? I honestly don't have one. I can't consume content. I used to read books all the time. I haven't read since the Chart Guys started. I can read a few chapters, but that's one downside. One of a few downsides to starting the Chart Guys is I don't have, when I'm creating so much content, I don't really have time to consume content. I can read some articles, I can watch some videos on 2 times speed, but I'm very limited. Will I ever sell my crypto core? Absolutely, but I'll sell it into strength. If it's clear we're in a euphoria hype market, I'll scale out into strength and just rebuy next fear cycle. I won't sell in fear. I'll go to 0, but I will sell it into euphoria strength. If this most recent Bitcoin move had gone to 100,000, I would have been scaling out. Hey, Zach, Happy New Year. Ooh, it's already won. Only a couple more here. I visited Canada a couple times. ChartGuys Jason's up in Canada on the West Coast. Went there to his wedding. We did a meetup in Toronto. I like Canada. I like that flight where you're looking up north and you see that immense range of mountains and nothingness. Any plans to visit Europe? I would love to. I got to go to Ireland, without a doubt. But when I go, I'm not going for a week. I'm going to go for months. And I can't do that with my current ChartGuys schedule. Probably when Sweetie Pants, my dog, dies, I'll make a pact with her that that'll be my catalyst for some European backpacking. Futures trading is definitely beneficial. There's tax benefits. There's the benefits of, markets trading much longer term, swing trading, not mattering about gaps up and down, skipping your stops. If I didn't, it's the kind of thing where I am in such cruise control and so content with how everything is going, there's just no point in me changing anything. But futures trading will be in my future at some point, as far as something I do pivot to, but just not looking to change anything right now. For newer traders, shares, absolutely over options. I was confident in my charting and technical analysis. I was 4 years in. Confident trader, confident analyst, and I lost money when I started trading options. It's not the same as stocks. It's harder. There's a lot more variables and aspects. I would say you have to have trading common shares down and confidence and consistency. Then you branch into trying options. Do I think technical analysis is more accurate with crypto or stocks? In 2017, crypto was the most clean technical analysis I've ever seen in my life because it was pure emotion. Think of how many new people were in that space, and it was just all emotion driven. And I've never seen technical analysis work that well. And now that has since changed a bit, and now I wouldn't discern any difference, really, in the two markets. Do I keep the same routine and time for my discipline? So I have a hard time with routine because when you're in routine, your life flies by. And I really don't like that. But you got to be in a routine to consistently trade well. So I will intentionally break up my routine by traveling or doing other things, and my trading suffers. And I know I'm gonna, I'm gonna disrupt my trading a bit by doing it. But that's part of the life trading balance where you have to do it. And I look forward to trading less and traveling more and having new experiences on a daily basis. But yes, while I'm in this routine and in this ChartGuys flow, I'm extremely disciplined. I mean, I pass things up because it'll mess up my sleep schedule. Like, I'm not going to go to a music festival. Well, I will sometimes, but there are many things that I'll do that I will turn down because it would mess up my sleep schedule and that would impact Monday, Tuesday of the following week. Most memorable job that I've ever had that is not trading: lobster fisherman up off Cape Cod in Massachusetts. Sophomore of high school, first branching out into the entrepreneurial world of things. Waking up at 5 a.m., some of the hardest work I've ever done. Second hardest job I've ever had, farming. Definitely harder. But that was fun. Some people don't believe in TA. I used to try and convince people. I wasted so much time. When I was first starting, I would try and convince people technical analysis worked. Now I just don't care. Like, okay, nod and smile, see ya, and I'll talk to the people that do believe in it because I'm living it and I don't have time. Thanks, Bufo. I appreciate that. More fraud in crypto or stocks. It's probably more blatant in crypto, but it's everywhere. What is my opinion of RSI? I love it. It's one of my major tools. I love bounces. Do we have do good things swag? We do promos. We got the beanies. Well, it doesn't say do good things on them, but we do sweatshirts and stuff for promos. All right. Favorite bands? I like the older stuff. Beatles, Who, Supertramp, Led Zeppelin. Newer stuff, I like the New Deal. I like Turquoise, Dumpster Funk, Motet, Closey. All right. Can't keep this going. Tom Brady's throwing the ball. Got to watch him. Hope you're all well. I appreciate you tuning in. I'll do this more. This came from doing a Zoom chat with ChartGuys members and just loving the chat informal aspect of things. So we'll do that a bit more. I appreciate you all stopping in and have a good rest of your long weekend. We'll see you when we hit the ground running.